Now by Chris Fowler. He's the CEO of Canadian Western Bank. Chris, thanks very much for coming on the show.
Great to be here. Good morning, Andrew.
Can you give us a benchmark here? How many of your people who would normally be in the office or in the branches are in fact working from home, or what percent are working from home?
Yeah, so this was obviously quite a massive change, but we have actually 85% of our staff working from home. So quite remarkable. And we were able to do that because we have a very current technology platform, but it was quite the transition to have people move from the office to work from home.
85. Now, you are primarily a commercial lender. So does that mean a relatively small proportion of your staff would normally be in the branches?
So we have 42 branches that go from Victoria now to Mississauga. And so we have all well-staffed. We are commercially focused, though. They're bigger footprint branches. So they would normally, a smaller branch would have 50 and our largest branch has 75, for example, in people. And then we have corporate offices in Vancouver, Calgary, Edmonton, and also two other business offices in Richmond Hill and Mississauga as well.
Now, tell us, we want to hear about your Ontario expansion, your geographical plans, but tell us, in March, in April, was there a point at which you were just shaking your head with the complexity of moving people off-site, the IT demands, and of course in banking you have special regulatory, and you got to be always so careful in terms of commercial security and confidentiality. Was there a point at which you were just grey-faced with the challenges?
Well, we have a very good business continuity team that leapt into action. And as I mentioned, we have a very current and modern technology platform, which is very helpful as we looked at how we would deliver the bank to our clients and for our staff to be very, very well supported in how they could actually do their job from home. So we were able to put in place video conferencing very quickly that allowed us then to have the ability to interact very seamlessly on the phone. And if you probably recall back in March, and particularly March and early April, conference calls were dropping all the time. It was really difficult to have really effective communication. So we were able to ramp that up very quickly, which was very positive. And people did come, into that home environment. We gave allowances for people to buy extra monitors, to buy keyboards, to buy a chair, to really improve that ability for them to work effectively at home with the right tools, and put in place a structure that allowed us to do check-ins and have all the required, and to your point, all that oversight that needs to always be there in terms of how you deliver the bank to the client and then monitor how you're performing. So it was quite a ramp up. But it went quickly and it went very well.
How many of your people, what percent of your people would you see working from home permanently, or maybe half the week or something like that? I mean, do you think there will be a chunkier workforce that will work at least a portion from their home permanently?
I think that the whole concept of flexible workplace is what we will be definitely drilling into, because I think people have found that, particularly people that commute a fair distance to come into the office, that they wouldn't necessarily have to come in 5 days a week now. We really improved our internal processes to support how we can support our staff and them be really effective in their job. The thing about coming to the office, though, or coming to the branch or the workplace that where they gather, is it does breed great creativity. So that's the one great thing about coming together. So I think people look forward to that returning. But in the meantime, I think we're doing a very effective job of being able to interact, deliver the bank, and sort of manage this very challenging time.
Now, we often think of you as the Alberta Bank, the oil and gas bank. Just to remind us, I mean, your biggest market is in fact BC, and your lending exposure to the oil and gas industry is not that huge.
So yes, our largest exposure to BC, Alberta is a close second. If you think about dollar loan exposures, if we think directly to oil and gas production, that's under 1% of our total loans. So it's a very small amount. But if you think about Alberta in general, it is an economic driver in Alberta. But specific oil related assets would be low for us. But we are that focused business owner approach where we look at that commercial sector, 80% commercial in our loan portfolio, and that is our goal, is to really provide the effective loan and financial solutions to business owners.
Now, tell us about your expansion into Ontario, into wealth management. You bought Leon Fraser, for example. And while you do that, I'm going to pull down my blinds because the sun is shining in here. Okay. Tell us about your move eastward, please.
Yes, well, it's been a gradual move. We first bought a company out of Winnipeg called National Leasing in 2010 that had majority of their business in Ontario. So that was really kind of the start of it. And then we've been very fortunate with a couple of great acquisitions in 2016 in Ontario. And then we just opened a branch this year. So very positive from the banking side of the equation. On the wealth management side, we had the opportunity to buy TE Wealth and Leon Fraser that have large footprints in Toronto, Montreal, Calgary, and Vancouver. So a great national footprint. And their core client, again, is that business owner as well. So we see the great synergy between the wealth management acquisition and our clients and providing the right financial solutions to them. So really looking forward to what that can provide. And for us, we moved from 10 years ago having about 7% of our business in Ontario East, and now we have 28% of our business in Ontario East. So a significant diversification, which offers lots of opportunity for growth. And we are able to come to Ontario, with this focused business owner delivery that we think provides lots of great solutions for that category.
The pandemic obviously has shown that businesses have to be ready to change rapidly. What do you think the big leadership lesson has been?
Well, I think agility has been the leadership lesson for everybody, is to really determine revenue, costs, who your market is, and really understand what those relationships are that you need to kind of put together to ensure that you are generating a positive outcome. We've done a lot of triaging with our clients, and our focus is to be proactive, to reach out, to ensure that we really understand what's in front of them. So we've been very, we looked at putting in at the outset loan deferral programs. So we did that early on, and that worked very well to give a pause to a lot of clients that allowed them to kind of reposition and determine what they needed to do to move forward. And we're down to, virtually all of the clients have come off that payment deferral and are now kind of looking at how they can run the business in a very challenging environment. And it is a bit of a K-shaped recovery, right? So there's parts of the economy that are doing just fine, and ones that are struggling more. So we're very focused on each client, what those solutions that they need to be successful are, and look to really provide that.
Now, just to close out, I'm not sure if you saw this story today. Home Capital, the alternative mortgage lender, plans to buy back some of its stock up to $50 million. I presume you and the other banks are limited from buying back your own stock by OSFI, the regulator. Home Capital tells us we're doing it through one of our divisions, Home Capital Group, and that it doesn't affect their regulatory capital operation. So they're poised to buy back stock. So is Equitable Group, another alternative lender. Are you satisfied there's a level playing field here, that if banks are prevented, it's fair that these lenders should be allowed to?
Yeah, well, Andrew, I haven't read that, so I will read that with interest. Yeah, currently there is a moratorium on dividend increases and share buybacks for Schedule I banks, of which we are one. And that's as you kind of look to the future, you're always looking for ways to manage your regulatory involvement and making sure that you have in place the right structures that allow you to be competitive. And that's really our goal, is to ensure that as we interact with the market, with the regulatory side, is that we are doing our best to ensure that we have all the right tools in place to allow us to grow and really support our investor base.